We're going to be going live on Facebook. Okay, we're good. We live? We good, Colton? We're good. Ladies and gentlemen, Goldsplosion. Everybody talks about where gold has come from, but where is it going to go next? Our answer might feel warm and fuzzy like a old, strong, confident dog. We're going to go ahead and talk about that and more. I am Mark Melnick, and this is the Newsbeat Show. Good evening, ladies and gentlemen. Welcome to the Newsbeat Show. So, where is gold going to go next? Just cut the. All right, everybody knows it had a beautiful move. Oil had a beautiful move. A lot of these sectors had a beautiful move. A lot of things had beautiful moves. But where do we go from now? What is the most likely scenario? What if there's going to be another leg in gold? But what is it going to look like? We're going to show you our predictions and so much more. But just know by watching this show, you are agreeing to hold me, Mark Melnick, and T3 Live harmless and not responsible for anything that might be portrayed to you in any way whatsoever by watching this or reading this show. If you do not agree to that, leave. And by continuing to watch, you are agreeing to those terms. Let's just get right into it. We all saw this beautiful moving gold, and you have some of the bulls out there saying, oh, these, I already heard the $2,000 announced target. I'm already hearing, these very interesting targets in gold. And while I am a long-term fundamental bull in gold because I don't think we're going to find a lot of gold. If you want to know the nerdiness of my research, I started analyzing things that were mined from asteroids and meteorites in which humans want to land, ships on and start drilling and excavating these things. And if that sounds crazy to you, people you might know like Jeff Bezos are looking to do things like that, Elon Musk as well, just throw out a couple names of some people out there looking to do this. So I started analyzing known asteroid and meteorite content. And my personal feeling is that there is not enough gold on those meteorites and asteroids to justify mining, but there are tons of sapphires, mostly rubies, on a lot of these asteroids and meteorites, and I think the ruby and sapphire market can actually start heading lower. With that being said, I'm a fundamental bull in gold, but where do we go next? We all saw the beautiful move. We all saw the pop up. We all saw the elevated volume. We all saw these things coming. And how can you make money off it? Because I would say that would be of utmost importance. So I just want to show you something here on gold of what has happened in the past. And I'm going to move my face only a mother can love just right over there. Yeah, I'll cover some of it so it doesn't hit you right away like that, so you could see more of this GLD chart. But let's just go ahead and take a look right here. You could see just using a simple weekly of gold, something unique is happening here when it comes to the Bollinger Band on the weekly, the 22 Bollinger Band on the weekly here. That is the top of this blue line, if you are wondering what it is. And that's what I want you to focus on now because it's going to show you why I'm predicting a down move in GLD. Let me just remove my face. It'll be a lot, safer for food consumption, drinking. Um, Looking at it here, you could just see it's breaking out of that top Bollinger Band here when I zoom in. You could see that blue line starts breaking out. Well, what does that mean, Mark? Has it happened before? So what I did is I'm showing you a chart that's over 6 years old, over 6 years worth of GLD, and let's look at what we found. The last time this happened was right over on the weekly here, about a month before October of last year, and we broke through it. And look at the pullback. You see that pullback that happened? I highlighted the area for you to look at. So you see this blue, the top of the Bollinger Band comes up and then it pulls down. And let's look at the last time it happened. And again, I'm not cherry picking these incidences. I'm literally trying to show you all incidences. I didn't stretch this one far enough, but you could see you broke through the blue line, plummeted on the weekly. Look at this. Broke through the blue line, held sideways, tried to break up, fell, and then waited for the Bollinger Band to keep going higher. So it had to digest, go down a little and sideways. Right over here, you could see breaks through the top of the blue Bollinger Band line right over there, gets destroyed. And if you're curious about what this move looks like, this is a $20 drop in silver. Each of these boxes you see here is $10 worth of range, just so we're clear. So when you see like this down move here, it's an 8-week down move of 20 points in GLD. So this is more swing. Now you could see right over here, number two, we broke through the Bollinger Band right over here, plummeted. And the time before that, and I'm showing you every time that it's happened. Broke through the Bollinger Band right over here, and that's back in 2012. This is 7 years ago, right here. Um, Breaks through the Bollinger Band, and decimated isn't even the proper word. Gold got destroyed. I mean, that was, if you remember, the big gold drop. That's when gold got absolutely decimated. Now we're in this situation is number six, and I want to talk about certain strategies to do here. And just before I get into the strategies about to play it, I'll just take a look at the volume I highlighted. There's nothing special about this current volume in GLD that hasn't happened in the past when these things were happening and plummeting. So I did want to point that out that I know everybody looks at each single time, and that's what's happening right now. They're looking at GLD, and you have some people just, 14, 15, 16, $1,700 an ounce gold. And I'm not saying it doesn't get there. I do think gold fundamentally is a very undervalued asset. But again, this is not about people who are holding gold for 20 years. These are not about those people holding gold for 15 years, 25 years, 30 years. This conversation is not for you. This is a different conversation of somebody who's looking to capitalize in, I don't want to use the word short term because it is on the weekly. Let's just spell it out instead of, putting a label on it. Why don't we call it, this is at least a 6 month. I would buy options 6 months out, at least, if not longer on the put side. And it's kind of weird for when is it going to happen and why are you calling this GLD bottom? And I want to show you algorithmic resistance here. Now, there's a very rare thing which happens in the market when these stocks hit, certain what we call algorithmic trend lines. Like if you notice yesterday, we called 152 to be the bottom of IWM. And, you know, no, we called 150, excuse me, and IWM hit 152 today and held there. I mean, these algorithmic trend lines are just the scientific way of putting it is just a level where the majority of black box programs will be biased to one side, and that will usually cause the biggest volume. So now, it, if you don't know, let me, show you that 99% of situations that when the market plummets down, 99% of those situations, when the market plummets down, the red volume bars will be higher, um, more volume than the green volume bars. And that is, generally a statistical fact. Here is the funny thing about this situation here. Excuse me. Let me just fix that, get my face back in the right place. All right, had to do it like that. Shoved it too far in the corner. Okay. All right. All right, right there. So what happens here now is if the volume actually subsides, you're in a rare algorithmic shift where low volume is actually bearish, not bullish. And most people, when they watch the market grind up and head higher and spike higher, it usually has lower volume bars than the red bars in terms of the green bars. That sounded a little confusing. But if you take a look even at the daily right now, you see these elevated green volume bars. What I'm saying is the only way gold can further its up move, to further its up move here, the only way it could do it is with increased volume. The day you see low volume in GLD in the morning, the day that you see lower tempo volume in the first 30 minutes, some, for me, I would use bullishness to call, to open up a put spread. And again, I just want to be perfectly clear. As I speak to you right now, gold is up nicely after hours. It's up 51 cents at the moment. Look, I'm not delusional to what is being said here. Like I understand exactly where I'm coming from. Yes, I see gold gapped up. So when you see it gapped up tomorrow, don't start, obviously like foaming from your mouth or say, don't, get nervous. I mean, yes, the GLD is up after hours right now. What I am saying, and the way I would play it is one of two ways. One, I would look for a confirmation bias trade, and that's going to be the infamous red dog reversal. And that was the old confident, well-loving, gorgeous dog that I was referring to here. So look for the type of red dog reversal, and I'm going to show you exactly what my algorithms are saying, because the powerful thing about the red dog reversal is that when it's put in combination with the algorithmic trend lines, the hit rate increases substantially. So I just want to show you a few of the things that my algorithm is picking up, saying that the next red dog reversal in GLD, if applicable, of course, would be a solid play. And I think I could just show you this again. You know what? Let me just show you the daily. I think I could show you more recent stuff. Okay. So what you'll notice here is you don't always get red dog reversals to the downside, but when you do get them, they tend to be very powerful. When you do get them, they tend to be very powerful. The thing is with this red dog reversal, why this one has a very high percentage chance of winning, 83% to be, according to my statistics. A situation like GLD, if you gap up tomorrow, which again, you're gapped up, and I know I'm talking smack about gold right now, and it's sort of, you know, started ticking down a little as I'm talking about it, but it's still up after hours. It's still up 38 cents at the moment. What I'm saying is you want to gap up tomorrow and you want to see yourself pulling below the high of 134.04, because the next red dog reversal is going to be, for me, I would look for like my personal targets. I know it could head potentially much lower. I am looking personally, I would probably look for 3 to 6 points depending on current market conditions. So I'm looking for a nice gold move. I'm not trying to call a 20-point gold move here, even though anything is possible and it has happened in the past. That's what I like to call level two analysis, where people basically come at you and they're like, um, you know, this is we're going to get a big down move in the future, or we'll get a big up and then a big down move. And there's no market timing, there's no specifics. Let me be specific on the timing of this because I really want zero confusion here with my conviction. So again, I think that the higher this goes, the better it is. I'm not saying you will definitely get to catch a red dog reversal, but I'm looking at this, and if this thing starts going through 135s, 136s, and maybe by some miracle actually pushes through there, I think you approach it with a put spread opportunity. I like, I might just go straight, puts out of the money. Like you could do crazy stuff. I haven't looked at the pricing yet, and I probably should, but I'm thinking already like 130, 125 put spread going 6 months out. I'm not sure of the cost of that. I might go a little further out of the money if it looks cheaper. Again, if you're in the Newsbeat room, I'll share with you exactly what I buy, but obviously it could be done through common stock as well. I wouldn't personally short gold shares here, GLD, but at least I get to share with you the way I would trade it, and you could approach it accordingly to your own risk parameters. But looking at GLD, again, to me, this is a 6 month. You go 6 months out. I'm not saying it's going to take 6 months to work. I would probably say most likely, just based on this chart over here, and given how this is the second week in which we're trading higher, I don't think this takes more than 2 weeks to have this down move of what I'm saying, or at least start seeing the start of the down move. I mean, again, I'm going 6 months out. I think 6 weeks later it'll be very readily apparent, the down move that has happened. And I do know there's a lot of people out there who are already thinking like now this time is different. Maybe it is. I am giving you the first stage of predictive analysis by basically giving you a time frame of when it's going to have this down move. And for me, even if you catch 2, 3, 4, 5 points in GLD, I think that's a home run, even if you could have caught 20 or 30. I am not really at the point where I can fundamentally be bearish on gold. I am not fundamentally bearish on gold. But in terms of, movement here and whatnot, to me, it technically makes no sense other than to short it based on, readily apparent statistical analysis of what has happened in the past by these unique Bollinger Band tops. This is a weekly chart. You could even do volume comparative analysis on the volume on bottom. It's really showing that nothing special or nothing different is what is happening compared to the past. And I'm going to go ahead and I'm going to officially say that gold is within this second as I speak, and 2 weeks within, like let's even call it like a 4 or 5 point down move. Let's leave it like that, okay? A 4 or 5 point down move. So, um, yeah, that's what I'd look for there. You might get a red dog reversal. That would be the best thing, I think, because based on, again, just what my algo is saying here, is that if we get a red dog reversal here in GLD, that's going to be, to me, the proof in the pudding that we're going to have this 4 or 5 point down move in what I am looking for. So, again, just wanted to share that with you. How about we give you tomorrow's levels today? I'll talk a little about the open house here momentarily. I think a lot of you guys actually want to, hear what happened today. And I want to actually say this is one of the days I'm most proud of, and it sounds kind of weird because I made a little less than 500 bucks today. And I think that's important. I think that's important because this is how I came in the morning. And look, you'll have any trader who's up 5 figures on any day, while most traders on a day like today probably over traded, watch the market grind. you know I just want to show you the type of message that we sent today on the first day of an open house. And it just basically says this is 8:55 a.m. I say, good morning, bandits. Welcome, open house members. Nothing is exciting me today. Not a lot of analyst notes. I typoed it and wrote noted. Volume remains light. Get acclimated right now. Ask questions. Consistency is all about understanding that not all days are created equally. And we were just walking in the morning with the mentality of the sit on your hands. And coincidentally, um, the Q's put in the tightest range this year of 66 cents. There has not been, and I even said volume is light. I want you to look at the volume today. Did you know the volume was going to be light today? Did you know the volume was going to be light today? Did you know to sit on hands off today? Did you overtrade today? This is what took me 15 years to learn. We have members of the Newsbeat live room who don't trade any of the names I trade and just wait to see that in the morning so they know how to approach their own trades, whether they're trading oil or other names that I'm not trading, gold, silver, etc. This is what they do. They they take note in things like that because it brings immense value. And just so you know, today's volume 18.7 million compared to just Friday in the queue. And again, this is whoops, that's a weekly. I'm sorry. I was looking at the weekly. 18.7 million today. You put in 35.8 million on Friday, making this one of the lower volume days this entire year. So you could even just see there that the market did nothing today. I think according to my room, I've said this maybe 3 times in the room this year, where I literally did not put any name on the list. And you might look at that and say, that doesn't mean anything, Mark. That doesn't mean anything. I made, 3,000, 2,000 scalping today. And I'm looking at you and you have to say, just because you are able to dance across the fire pit, the snake pit, dodge the pointed log swinging at your head. And just because you made it to the other side does not mean it was intelligent for you to try to run that gauntlet. Because traders who do that are the same traders who walk into slow days in the market and they blow out. And they'll walk in, they'll take a $4,000 or $5,000 loss on a stupid day like today, and they'll give back everything they made. The whole point of consistency is to always make more money than you lose. So this is what we did today. We announced every trade with almost no conviction. Just show you a couple trades. Um, right over here, we did a Mark 5 strategy on Deer, and we broke through 166.10. And Deer went all the way from 166.10 to 168.38. But you know when I sold? Like 40, 50, 60 cents higher, and I just said, bye. I was out over here when we were at day highs. Mark 5 is a target of day highs, and this is the first name we attacked, and this is what the market was doing as we were buying Deer. Here's the market. Plummet. Here's Deer. Pop. Did this trade excite me? Am I going to get that Porsche that I never wanted in my entire life? Am I going to buy my own tropical island? No, but I didn't overtrade. I don't suffer psychological toxicity. I'm not going to be depressed. I'm not going to be exhausted. I'm not going to not be able to spend times with my loved ones. I'm not going to be able to, you know, I don't know, not feel like garbage. Keep your body healthy, keep your mind healthy. We could walk into a very big play. Keep it smart, keep it real, keep the money tight. Like, what else is there? I mean, I think a lot of traders appreciate the fact that when you walk into the trading world, um, my casino is very small. Like me, I'm probably like I'm that I'm that casino, that only has like one game or two games. I'm not the casino where you walk in and there's like 100,000 slot machines and 50,000 tables, and that's not me. I'm not here to show you the glitz and glitter of every single thing out there. I'm here to tell you that you are not supposed to take 99.99999% of ideas that you think are good. You're not supposed to do every single trade that you think can make you money. Because traders who think like that are never ahead. Even when you're right, you're going to be wrong tomorrow. And if you're right tomorrow and right tomorrow and wrong tomorrow and wrong tomorrow, right tomorrow, you're going to see your wheel spin with smoke coming out of the back. And the smoke is your psychological fortitude escaping your body, waiting, setting you up to do something massively stupid in the future. And why don't traders get that? We were talking even in the room today about leaving your feelings at the door. And I stopped and I said, what does that even mean? Like, how do you like stick your hand in your chest and just put your feelings down by the door, trade, come back and pick them up? And people tell me, yeah, traders need to be emotionless. That's BS. What do you mean traders are emotionless? That's the stupidest thing I've ever heard in my life. That traders need to be emotionless. Oh, how about this? Human traders need to not be humans because humans have emotions. Ooh, whatever. Why must being a trader strip us of our humanity? You ever stop and think about that for 1 minute? Why doesn't anyone propose that question? Why can't trading be about low stress, happiness, consistency, profitability, something you could rely on at the end of the month? Like, when did it have to turn into, like a circus casino where, yeah, I'll tell you what, you want to go in that slot machine room, you want to pull the slot machine 100 times, maybe you have 40 winners, 50 winners where coins or credits moved up in between your loss spins. And you'll keep pulling and pulling and pulling and pulling because you'll see your money go usually when you go on a slot machine, usually the money goes down, and then sometimes it goes up and even higher than where you started, and then back down, and then up, and it literally takes you on the roller coaster. And that's what traders do. And they're looking all day, and they're looking for opportunity, and they're looking to find the next thing they can trade, and they need to make money. They had to do it because they did such stupid trade before, so now they have to do the next trade, and hopefully that will work. And I look at these traders and I'm like, these traders are the reason why 99% of them fail. Why 98.8% of you fail is because of that reason. You know, it's funny. You ever see one of those nature shows in the wild, like the Discovery Channel, and you see like the hyena pack, and some people have a queasy stomach for it, and I respect that. But like sometimes you'll see like a lion pack, and they'll catch a bison or a gazelle, and they'll catch one of these animals in the wild. You know what's funny? You know what the lions don't do? You know what the pack of lions don't do? They don't take down 6, 7 bison. They don't try to catch 20, 30, 40, 50 gazelle. And maybe they can. Maybe they can exert their energy and catch 20, 30, 40 of these animals. No, but when you have thousands and tens of thousands and 100,000 buffalo, they'll take one and they'll back off and that'll be it. What if a trading room was supposed to be like that? What if it was supposed to be a pack of lions looking at one thing, all catching it, all getting their meal, all getting their share of the day, and stopping and not trying to kill everything around it, burning themselves out, risking injury, psychological injury in this case. We're not talking carpal tunnel. What if that was happening? What if that was the point of trading? What if the point of trading was to not get so blinded by all these different chart patterns where you feel obligated to be in these trades? What if success is measured beyond everything that you ever thought in trading? What if success is measured with making money consistently and having a peace of mind at the end of the day, not waking up depressed, not waking up huddled in a ball, not hating trading, not going and being skeptical about everything out there because everything doesn't work. And you're the trader where if I just did the opposite of what you did, I would be up a lot of money because you always lose money. And how do we break from all these negative mindsets which plague us and are toxic? What if I told you none of that was your fault? Would you believe me if I told you that zero of it is your fault? And Wall Street created an atmosphere that's supposed to imprison you within this psychological chaotic flux where you just can't escape. And no matter what, like you go, you turn the corner, they're throwing names at you. Look how I did it. Look at these. They're throwing all these things at your face, and you have no idea what the expletive word is happening. And you're like, oh my God. And you turn, and people are throwing like so many things in your face again. And you're just trying to turn consistent. You're trying to say, oh my God, I need to find something that works for me because I love this job and I want to be successful at it. What if that was possible? And what if I told you it took me 12 years to get to where I am today as a stock trading broadcaster, as a 20-year active intraday trader, but a 12-year stock broadcaster to understand that that's what a room needs. That's what a room needs. The room needs precision, confidence, and conviction. And you rather have that on one thing you're going after as opposed to 20, 30, 40 things that you're going after. In nature, that just does not, it's not how things work. And I know I'm making a comparison to lion feeding habits to trading, but if you actually stop and talk to the 50 plus people I talked this week, another 50 plus last week, over 100 traders in 2 weeks, and you talk to these traders and not all, almost none of them are sitting here talking about making $1 million, $2 million, $3 million. Some people are like, I just want to make 50 grand a year, 20 grand this year to supplement this that I'm doing. And they're coming with all these realistic goals. They're not sitting there saying, oh, I need to buy the Ferrari. And they're not one of those. They're not immature. I consider that mental immaturity. They're not mentally immature. Not by owning the car, but by saying that you want your riches to be able to buy you these things. Most people just want consistency. Most people want to be one of those lions in the pack, catching a meal, biting off their fair share, and calling it a week, a day. Lions don't feed every day, but you get the picture. They're not just sitting there, you know, they're sitting there content after not running after every single animal. So here's a bull flag position I took today. Just want to show you. Stock pulled down here. I bought it through 81 cents. Went 6 cents with me. Pulled back over here to 14.79 where it was 2 cents against me. And I sold it out for just worse than a $10 physical loss. And I said, screw it. This bull flag is taking too long. It pulled down, popped up. My Caro meter was at all-time lows. I threw away the trade so I wouldn't have to watch it all day. Totally brilliant move in this environment. This is how you stay consistent. You don't have to wait for a stop loss to throw you out. And you don't have to have some obnoxiously high expectations to be a successful trader. And if you are still under the delusion that batting a 45 to 55% is a sweet spot for a trader to make money, whether you make money or not, it's only going to be a matter of inevitable time where you're unable to make money anymore because the psychological toxicity will jump in. You'll be that trader that just has those 1 or 2 or 3 really stupid days because your brain blew out. How do you put a price on that? How do you put a price on a strategy that keeps you away and protects you from you? How do we protect you from you? And that is ultimately why everything exists in the way it does. You're interested in hearing more of my sexy voice? You want to hear more? I mean, you might want to see less of this, but it's going to be a give and take relationship here. You want to hear more of this voice? You want me to answer all your questions and more? That is for Newsbeat Live members and Newsbeat Live Open House members only. There's a link in this description. There's a link in the description to this video if you are interested in checking us out. Again, it will be going on till the end of the week, so you'll get Tuesday, Wednesday, Thursday, and Friday. Definitely join us. Definitely hear more of us. Definitely see what we're looking at next. Definitely see how we're going to conquer the markets. Happy trading, make money. I will see you guys tomorrow on the Newsbeat Live trading broadcast. Have a wonderful evening.